for tuning in to today's episode of Call to Account. I'm Jacqui Woods.
And I'm Paul Croft. We're directors in BRI Ferrier's forensic accounting practice. So Jax, what's on the agenda for today?
Today, Paul, I thought we'd talk at a high level about business interruption claims and some of the issues arising in quantifying such a claim.
Yep, it's a great idea.
That being a very topical and pressing issue for many businesses that have been adversely affected through this whole COVID-19 thing.
Yes.
So at present, as you know, payouts of business interruption claims relating to COVID events are being held up while our courts decide on various legal issues associated with COVID-19 related business interruption claims. As some of you will know, in July last year, insurers and the Australian Financial Complaints Authority, otherwise known as AFCA, agreed on a test case to seek the court's determination as to whether the impact of COVID-19 is covered in insurance policies which still refer to the Quarantine Act of 1908, which was repealed in 2016 and replaced by the Biosecurity Act.
That's right, Jacqui. Now, that case was heard in October, with the New South Wales Court of Appeal handing down its judgment in November, determining that those insurance policies that referred to the Quarantine Act were not excluded from cover under the test case.
That's right, Paul. But then in December of last year, the Insurance Council of Australia, otherwise known as the ICA, lodged an application to the High Court for leave to appeal that judgment, Paul. There's no word yet as to whether the High Court will actually go through with the appeal, but I believe oral argument for the special leave to appeal is set down for May or June of this year. And in the meantime, the ICA has commenced a second test case, Paul, this time in the federal court, to test the meaning of certain policy wordings regarding the definition of disease, proximity of an outbreak to a business, and prevention of access to premises due to a government mandate, or similar policy wordings to that effect. So there's still a way to go in terms of gaining clarity for businesses making a BI claim because of COVID-19. But I understand that's going to be heard in about September?
That's right, yep.
With the appeal, if any, potentially coming before the courts in November.
That's right. Now, even if those appeals are upheld in the courts, the policy holders may still need to get past certain exclusions that may be present in their insurance policies. So look, for the sake of today, let's assume that the appeals are upheld in the courts and that the claimants can get past those exclusions. They're going to be then faced with the challenge of quantifying their loss. Now, quantifying their loss in a fire or flood, which is your typical sort of BI claim, is going to be very, very different to quantifying it in a COVID-related context. So, you know, when you're talking about fire and flood, you're talking about something very physical. The impacts will be very obvious and generally means that the quantification will be quite straightforward. When we're talking about COVID, we're talking about a much more complex issue. Definitely. And without doubt, issues around causation and proximity, as you mentioned, will come into play.
Yes.
And which will then consequently have an impact on the sorts of information, the nature of information that claimants may need to provide to support their claim for business interruption during COVID. So, Jacqui, causation. What do you think are some of the topical, the key issues that will come into play during this case?
Yeah, so that's a good question, Paul. Just stepping back a tiny bit though, as with any business interruption claim, the methodology of quantifying the loss is more or less covered in the wording in the policy document. And it's just a question of understanding or interpreting what those words mean. So for example, the BI loss might be calculated as the rate of gross profit, as defined within the policy, times the standard turnover, minus the actual turnover in the interrupted period. The standard turnover is typically defined as the turnover that would have been earned, but for the interruption, adjusted for, important term, trends and other circumstances that would have affected the results in the interrupted year regardless of the incident. So, the trends clause, Paul, that's such an important clause because it requires the standard, or as we refer to it, the but-for turnover, to reflect not only adjustments for trends in the business, but also for variations in or other new circumstances affecting the business. So coming back to your example, in the fire or flood situation, calculating the standard turnover but for the damage could be as simple as taking a couple of years of historic turnover and multiplying it by a trend or a factor that directly affects that business.
Yep.
For example, a change in the commodity market price.
Or it could easily be a change in the foreign exchange currency translations.
Exactly. However, as you've already alluded to, COVID by its very nature is different. It's a different type of damage, and because of that different, the range of, back to that phrase, other circumstances will, in theory, be very broad. Some of those that immediately jump to mind are the impacts of government-imposed restrictions that resulted in full or partial closure of one's business, the federal and state government border closures,
Yep.
which put an end to international and interstate travel, the state government mandated work from home orders. Who would ever expect that to happen? Disruptions to one's supply chain due to international border closures, businesses themselves delaying the return of their employees to the workplace.
Or in fact, even the employees resisting any return to work that may have been required by the job.
Exactly, because they didn't want to sit on the train next to someone who may have COVID. And then obviously the non-mandatory business closures due to consumers' general absence from public spaces and venues.
Now, just to drop you there for a moment, Jacqui, a lot of those other circumstances that you talked about are the sorts of ones that would actually depress a claim.
Mm-hmm.
But then on the flip side of that, you've got the level of government support that was provided through JobKeeper, and plus other sorts of support, whether through the banks, landlords, or the ATO, that may also allow the business to actually operate more at a normal operating capacity.
Absolutely, and that's such a good point, Paul, because if you were to take all of the circumstances into account, the good and bad, the but-for turnover could be reduced to the point that no loss actually arises.
Correct.
So while the Australian courts have yet to address this issue, the recent decision in the UK Supreme Court offers some hope to potential claimants, concluding that COVID-19 and its various consequences are not trends or circumstances for the purpose of determining standard turnover. I think I'm correct in saying
That's correct, and look, from an insured's perspective, definitely a great outcome.
Yeah.
For the insurers, not so great. Look, I've had a quick look through that judgment, and while the UK Supreme Court talks about proximate causation, it doesn't really provide any sort of guidance as to how broadly the concept of various circumstances should be interpreted. So where does that leave us with proximity, Jacqui?
Well, that's a tricky one, Paul. So broadly speaking, the global nature of the pandemic has introduced a high degree of uncertainty into the Australian economy, which in turn has caused many businesses to conserve cash while there was no end in sight to the pandemic and no vaccine available. So what I'm trying to say is we're now looking at consequence upon consequence upon consequence. Yeah. And at what point do those consequences and the broader global macroeconomic trends become too remote to ignore in a calculation of standard turnover? However, Paul, this is actually a legal issue, so I'm going to leave it to greater minds than mine to ponder over that one any further.
I think that's a wise choice. Not that you're not a great mind, but yeah. But look, as you were talking about causation and proximity, running through my head was, what sort of information will claimants need to provide over and above the sort of information such as financial statements, accounting records, or other financial data that would support their claim for a COVID-related business interruption claim?
Yes, okay, well, I think, Paul, that's going to become clearer as the courts make their determinations on different things in terms of, what might be needed. But let's not forget that restrictions that have been imposed have not been done evenly across states or even cities. Or suburbs. And that brings to mind the Northern Beaches during this sort of Christmas period, when the north part of the Northern Beaches had different restrictions to the southern part of the Northern Beaches.
Which left Sydney untouched.
And left the rest of us untouched. And So those businesses operating in those areas are going to have very different stories about the impacts of COVID on their business, and particularly as that all occurred during the peak holiday season. But coming back to the unusual type of information that I expect claimants will have to provide to support any claim that they put together, I imagine it's going to be things like actual copies of government measures that were mandated, including the periods of such measures and the scope of restrictions imposed in particular areas. If you're a business that has a number of outlets in different parts of either the city, the state, or the country itself, you're going to have to identify the percentages or the parts of your business that were affected in different ways, potentially, in different places. There could be access issues that you need to identify in different places.
Not forgetting that access was changed gradually throughout and then wound back a number of times.
Exactly, which leads to the point that there may have been losses in discrete periods of time. So a loss may have occurred here, improvement, back down to lockdown. Other statistics such as support for changes in footfall, for example in a shopping centre, a retail shopping centre, and even official documents that refer to the infection rate in the area in which your business operates.
Right point.
Not to mention, I think more than ever, monthly sales figures and expenditure will be much more important than otherwise it would be the case. So, Paul, I think I could go on forever, and I do.
You've done a great job today.
So I think we'll just call it quits on today's episode, but just to remind you that once the whole appeal process and the second case starts to play out, we will be revisiting this, and we'll also be interviewing a lawyer who acts in this space in the future. So look out for us on that. Thank you for listening, and see you next time.